Are you ready to dive into the world of Forex trading but feeling lost in a sea of jargon? Welcome to the exciting realm of Forex trading, where understanding the lingo can make or break your success. Let's unravel some essential terms every beginner must know. First up is PIP, which stands for percentage in point. This tiny unit measures the price change in currency pairs, often just a fraction of a cent. Understanding pips is crucial because they determine your gains and losses. Next, let's talk about leverage. Imagine controlling a massive amount of capital with just a fraction of your own. That's leverage. It amplifies both your potential returns and your risks, so tread carefully. Speaking of risks, you need to grasp margin. This represents the collateral needed to open a leveraged position. Think of it like a deposit required to play in the big leagues. Now let's explore spread. The spread is the difference between the buying price and the selling price of a currency pair. It's like the cost of doing business in Forex, so keep an eye on it. Transitioning to lot size, it refers to the quantity of currency units you'll buy or sell. Knowing the different sizes, standard, mini, or micro lots, can help you manage your trading strategy. Let's not forget bullish and bearish, which describe market sentiments. Bullish indicates a positive outlook, while bearish signals a downturn. Keep these terms in mind as they'll guide your trading mindset. Now, how about order types? Understanding market orders versus limit orders is key. A market order buys or sells immediately at the current price, while a limit order sets a specific price for buying or selling later. Also, familiarize yourself with the trade journal, which tracks your trades, helping you learn from both successes and mistakes. Remember to pay attention to technical analysis, where you study charts and indicators to forecast price movements based on historical data. And let's not overlook fundamental analysis, which dives into economic indicators and news events that influence currency strength. Knowledge of both analyses can give you an edge in decision-making. Finally, know your limits with stop-loss and take-profit orders. A stop-loss limits potential losses, while take-profit secures your gains automatically at a predetermined price. Understanding these terms equips you to navigate the Forex waters confidently and successfully. Which term surprised you the most? Share your thoughts in the comments, and don't forget to follow for more Forex insights.